Alright, so today we're going to be looking at the bank reconciliation process. So let's get started. So what is it? Essentially, it's a way to ensure your bookkeeping records match the bank information. Sometimes the information on your books are not known by banks, and sometimes the stuff that are known by banks are not known by your records. So this is why we need to do reconciliation. So transactions the firms did not know about could include direct debits. So we've withdrawn of cash directly from the bank account. Could be direct credits, so deposits directly into your bank account without you knowing. Or there could be a dishonored check, a check that cannot be exchanged for cash because there are not enough funds to withdraw. So these three scenarios here might explain why a business might not know about transaction, because something's automatically done through a computer system, or a check that they were expecting cash from did not actually follow through. So sometimes there are transactions that banks don't know about. This could include deposits not yet credited. So sometimes you guys will deposit a check or deposit some cash into a bank, but it takes them a few days to process it, so it won't pop up into their system till later on. Also, you got unpresented checks. So a check you might have given someone a check, but they haven't gone to a bank yet to withdraw the money from it. So those are two reasons. So what is the bank reconciliation statement? This is what it looks like right here. You got your bank balance as per bank statement. So we got the $1,007 credit from, oh, don't actually have it here, from the actual bank statement itself. Alright. Then you add deposits not yet credited. So all the money that has not been found out by the banks yet. They'll give you this number. Then you take away all the unpresented checks. So money that has not been cashed in yet. It gives you this amount. So 2437 take away 1980 will tell us that the bank balance as per business records should be 457. So this is what it looks like. Alright, it attempts to explain the difference between the bank balance and the business's reports. So according to our cash journals, we should have 457. By doing this and reversing things, if this number matches our records, then we've accounted for everything. So these are the steps involved in the reconciliation process. First, you compare the cash receipts journals, or the cash receipts. So first off, you go to your credit column of your bank. So the credit section here is all your cash receipts. And you compare it against your cash receipts journal. Tick all the transactions that are accounted for and circle the ones that are missing. So in this case here, we've ticked off, so $900, boom. Was there $900 in a cash receipts journal? Somewhere here? I don't see $900. The hell? Okay, something's really wrong here. 420? Okay, so after reviewing the textbook, I've realized they've made a massive mistake on there, and I need to resolve this right now for you. So on this cash receipts journal here, these numbers obviously do not marry up with these numbers on the credit side. They've made a mistake. These numbers are meant to be reflecting of these numbers here, so I do apologize. But the cash payments should be all correct. So if you see here, we got $1,000 being paid out. We should have $1,000 somewhere in our cash payments journal to reflect that. There it is, 1,000. So we can tick that both off. Now, the only thing we're looking for, guys, is just the numbers to be the same as the transaction numbers. We don't care about when the dates are or what the description is. Actually, description might be useful. We're just really mainly checking that the numbers marry up. Alright, so 1,000, 1,000, clear. $15, nothing here for $15. We need to circle it. 220. Alright, so 220. Do we have 220 here? There it is. Bam. 1450. Yes, 1450 here. Bam. 3960. 3960. 440. 440. $10. I don't see $10 here, so circle it off. We are done with the debits column. Do we have anything left on the cash payments? Yes. We've got clean supplies. 880 is not accounted for, so we have to circle that. So that's what you do for the cash payments, and you're meant to do something similar like this for the cash receipts, but obviously these numbers do not match this at all. So when they do match, just put ticks. When they don't match, put a circle. And if there's anything here that has been accounted for, put a circle also. Alright? So the next step is to figure out, update our journals to reflect the transactions from the bank statement, and then complete this diagram here. So let me show you how you do that. So the interest received, the $2, literally just came from here. This $10 transaction fee and service fee debited, so these are cash payments, have been recorded here. Alright? So these are now updated to reflect the new transactions. We've got 4702, 9075. So what do we do from that? Well, we put our cash receipts journal balance, 4702. Take away the cash payments journal, and it gives us a cash surplus or deficit. So in this case, we've got a deficit. You put your bank opening balance, which you will find in any question that we have. Add those two together, and that tells us what our closing bank balance is, 457. Now this number is important because we need that as a double checking mechanism for our bank reconciliation. And this is the bank reconciliation. So all the stuff that's been circled in our cash receipts and cash payments journal go into this statement here. So first off, we go bank balance as per bank statement. So in our bank statement, it tells us we have $1,007 in credit. So $1,007 here. Add your deposits not yet credited. So everything from the cash receipts journal that has not been accounted for. Boom. Gives us this. Less your unpresented checks. So all the stuff circled. Gives us a total. If you do your total, take away your unpresented checks, we should equal a bank balance of 457. If you get the same number as you did with the previous step, then you know, guys, that you have accounted for all the transactions and all the updates. So that's a bank reconciliation statement for you. So what happens if you have like a dishonored check? How do you update the journals? Well, all you do, guys, is on your cash receipts journal, just write disordered check, a little detail of who it is. Your record number will be your bank statement, and just simply put the value in brackets, so we know that we have to take it away from our positive totals. How about updating for errors? Well, in this case, they made a payment of 230 when it was actually meant to be 320. So all we do is on the bank statement, we got the error, check number 153, bank statement, we've added another $90 to reflect this. So now it equals out to be 320 like it's meant to be. Alright? That's how you account for errors. So overdrafts change the bank reconciliation process. So when you have an overdraft, guys, they invert the whole equation. So here's what a normal bank reconciliation looks like, where you start off with a positive bank balance. So here you go, we're negative 750. So the first thing we do is add unpresented checks, get this value. Then we less deposits not yet credited. And then it gives us a bank overdraft of 574. As you can see here, add unpresented checks versus add deposits not yet credited, less deposits not yet credited versus less unpresented checks. All we did was invert the equation to reflect the bank overdraft. And that's all you need to do. So if you have any questions, guys, please feel free to email me. I do apologize for the errors in the textbook, but when we get started and once we work through it, I'm pretty sure you guys will get the hang of this very quickly and very easily. Alright, speak to you soon.